please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The other stock to track, of course, would be Infosys. Now, we saw on Friday TCS reacted negatively to its earnings after having run up a lot. Similar thing play out with Infosys. Well, it was the first quarter, of course, under the new leadership. We have Ravi Menon now joining us from Elara. Ravi, good morning. Your thoughts on the number and, what would be your stock call after having seen the kind of run-up that we have seen?
See, I think the whole sector is looking at a slight re-rating because people look at this commentary from both TCS and Infosys as a sign that what we've seen for IT recently is not a structural downturn, but it's been cyclical. CY18 is looking a little better than CY17 is what most people think at this point. And Infosys management specifically said that about BFSI. TCS was not really sure about banking, but for the rest of it, they did think that it will be looking better. So I think that we should see this rally continue, except for if the rupee appreciates.
So basically, if BFS is improving, then one would assume it would improve even for TCS, although that management sounded more cautious on BFS. Between the two, what would your preference be now?
So we prefer TCS compared to Infosys. Infosys, if you look at the quarter's revenue performance, a lot of it has come from the platforms. The additional revenue that's been added, about 70% or more than 70% has come from the platforms. And that team, I'm not sure if they can continue to sustain that momentum because the senior leadership that Dr. Sikka had brought in, they have left. So how well can they execute if they're not given some new hires? Of similar stature, that's a question that's still open. But yeah, I think we will wait to see settled strategy and post-April if we see investments in that team or some new strategy for differentiation, and we see signs of that playing out. I think it takes some time before we can assume that Infosys will see growth that's in line or better than its peer group.
But
another thing is
go ahead.
Another thing is margins. I think that TCS has more margin levers going into the next year compared to Infosys.
Okay, but if you look at a valuation angle, then TCS is trading at around, 18 times FY19, expensive compared to Infi at about 13, 14 times. That argument won't be compelling for money to move out of, TCS and into Infi?
No, we think that, TCS's margins are superior and, they'll continue superior. And we think that a 20% premium will be deserved because we also expect TCS to grow a little faster than Infosys.
Okay, and what are your target prices on both TCS and Infi now?
Infosys, we are at 1,060 and TCS 3,100.
Okay. Any of the mid-cap stocks that you will watch out for now, having looked at the TCS Infi numbers, anything you're changing your mind on?
Not right now. I think that most of the mid-caps have moved up quite significantly. People have seen, I think, better momentum there. And typically, it's been that they have more volatile performance when they get a couple of good clients. They mine out. And once that's done, growth peters out. So whether they can sustain the revenue momentum we've seen recently, that's, I think, questionable. I prefer to stick with the large caps in the sector re-rating.
Okay, Ravi, thanks a lot for joining us and giving us your view. That's the word coming in from Ravi Menon of Elara. Let's watch out for the pre-opening rates. TCS, Infosys, IDFC Bank, Capital First, these are the stocks that will be in focus this morning. We'll also get some F&O cues going. Yogesh Mehta, the Vice President Equity Advisory at Motilal Oswal, joins in. Yogesh, hi, good morning. If you can quickly take us through your F&O strategies, stock-specific strategies for today.
Yeah, sure. Good morning. On the stock specific front, we are recommending Z Telefilms to buy. Currently, it is quoting at 594 in F&O segment, and can consider price target of 610 to 614. It has given a strong breakout after 3 years from the consolidation, so 580 can be kept as a stop loss. The another one is Kotak Bank, which has closed at around 1023 in spot and future with 1025. There can be considered as a buy with the multiple supports are there around 990 to 1000 levels. So there 1070 could be the price target, keeping a stop loss of 1000 rupees. And the third one is Equitas, which has given a strong breakout after touching to a low of 133 in the last 4 weeks, and now again back to above 158 zone. So can be considered as a buy from here. 163 is the current price, keeping 158 as a stop loss. Target could be in the range of 170 to 173.
Okay. By the way,
just a word.
strong
Actually,
rupee.
even IDFC Bank has started with 10%.
Yeah.
This may not prevail, but
No,
let's wait and see.
Yeah, I was just looking at the currency. The dollar clearly is having a bit of a bear run off late, and that's propelling, of course, a lot of emerging market rally as well. And that's where we are right now. You know, we went below 63.51, and then there was last 2 days some bit of profit taking. But once again, the rupee has started to become very strong and back below that 63.50 mark. 63.44 is what we have right now. Looks like a bit of a currency breakout as well. So would be interesting.
Okay, now IDFC Bank has come to 3.7% higher and Capital First remains 10% higher. IDFC is doing well. That's also up 6% now, owner of a bank. But I don't know, there could be some nitty-gritties about how much stake IDFC can continue to have. IDFC, I think, needs to keep 40% till 2020. The rules are still unclear. We will have to get that from Mr. Rajiv Lal later today when we get an opportunity to interview him.
Infosys is also moving up, by the way. In pre-opening, Infosys is up almost about 1%. Would be interesting to see where TCS is, because remember, TCS has been underperforming Infosys for a while. This morning as well, TCS is absolutely flat. Let's get Mr. Tulsian on board. He joins in now to discuss a whole host of stocks and the market as well. Mr. Tulsian, good morning. Thanks for joining us. In fact, the pre-opening rates right now have settled much higher, so just keep an eye out on that. 50 points higher on the Nifty and about 100 points higher on the Sensex. Mr. Tulsian, how do you approach Capital First after the merger that took place?
See, after maybe post today, once you see the price getting settled for IDFC Bank, you will not see the price discovery being made by Capital First, because what I take the calculation that IDFC Bank at price at which it will be ruling, multiply that by 13.9 and divide that, or take 96% of that will be the residual value for Capital First, because Capital First will not have its own leg to go for the price discovery. Everything will now depend on the IDFC Bank price at which it will be prevailing because of the merger having announced. Now come on the IDFC Bank, in fact there is, I'm in fact seeing a lot of confusion, and you know, maybe on part of the analysts and all that, or maybe I may be wrong, but you know, the kind of analysis which I have made, that the present book value of 44 rupees of the IDFC Bank will rise to 54, because mind it that the extra shares which are going to get issued of about 136 crore shares, there will be amalgamation reserve of 7,500 crore getting created in the books of the merged IDFC Bank entity, with a corresponding assets being goodwill on consolidation on the asset side and amalgamation reserve of 7,500 crore on the liability side. So you will be seeing the effective book value of IDFC Bank rising to 44 to 54. Somebody may say that this is just a book entry. If that is the case, then we have umpteen number of companies, you know, listed who are carrying this amalgamation reserve and goodwill on consolidation on the asset side, maybe pharma companies, IT companies and all that. That's just an accounting entry. I just tried to caution and make the dust clear on that. So you will be having effectively a book value of 54 rupees. And if you really take a call going forward for FY19, if I take the expected profits of IDFC Bank to be at 2,900 crore and capital at 380 crore, on the expanded equity, the EPS for FY19 could be anywhere between 6.50 to 7 rupees. I don't see any reason. In fact, V. Vaidyanathan coming as CEO of the bank, of the merged entity, seem to be a very big EPS and or maybe P and price to book accretive. I won't be surprised to see P expansion of maybe about 2 to 3x on that account, maybe price to book accretion of about maybe 25 basis point on that account. So taking all this into consideration, I am extremely positive. Even if you take 1.5 as a price to book, maybe in next 3 to 4 months or 5-6 months, by the time this merger should get over, this which will take about 6-7 months, 54 into 1.5, you know, you get about 81, 82 is as a price for IDFC Bank, and then thereafter it all depends on the financial performance of the merged entity, on which again the things are looking quite good because of the 93% presence of Capital First. Come on the post-equity restructure, about 4-5,000 crore equity has to get raised to balance the equity of all, maybe the Wobble Spincers, maybe IDFC as a holding company, or maybe the other institutions. I don't think that should really be a big problem. So overall, it is an extremely positive move, and I think that amongst all the private sector banks, if somebody wants me to take a call, probably I'll plunge in to take a call or, you know, make a buy call on the IDFC Bank at the current price. And I don't see any reason for IDFC Bank share to correct from this level. In fact, it should rise from here on, maybe barring some confusion and some kind of non-clarity, which is existing in respect to the book value or price multiples or maybe capital raising or maybe IDFC being the holding company, the stake holding in that. All those things may keep the things in a limbo for about near term, which in fact I don't expect. Otherwise, it's an excellent stock post-merger from here on to take a call on IDFC Bank. Yeah.
All right, Mr. Tulsian, you also have a long-term bet today.
Yes, I have a Kingfa Science. In fact, this stock was recommended by me on 27th November, less than a couple of months back. And the target is seen having met. And in fact, we have seen the huge buying here on Friday on both the exchanges with a volume increase of volume maybe by about 15 times on a delivery basis or maybe overall volume. And we're minded that this is a company, which are making reinforced polypropylene, and that's a metal substitute, which are very close guarded technology. Chinese promoters are holding 75% stake in the company. In fact, they were holding much more, maybe a couple of years back, about 80% stake, but because of the listing guidelines, they brought it down, and now the expansion is being carried out into the company. Company is having existing 5 plants of 35,000 ton per annum, aggregate capacity of 5 plants. Company is setting up a new plant of 70,000 ton per annum at Chakan. I don't know the exact progress. That could be the reason for the stock to really move up on Friday, maybe the expansion seen having completed, because company came out with a rights issue at 750 rupees about 4, 5 or maybe 6 months back to finance that expansion. But as I said, that I don't have exact clarity that what is the status of that expansion. But once that expansion happens, the capacity will triple from 35,000 ton to 1,05,000 ton, with company having 6 plants across all the geography. And this plant will be used again to cater to the automobiles, because a reinforced polypropylene is used as I said, it's a metal substitute, and it is used widely used in the automobiles to reduce the weight, to increase the average and all sort of things. And if you really see the situation now on the equity front also, in spite of this rights issue, equity is very low at 12 crore plus and 12.11 crore. As I said, promoters are holding 75%, who is a Chinese promoter. Chinese are very fussy in, parting with the technology and all that. So all the expansions will be carried out in this company. And as, indicated from the managements and all that, probably I won't doubt the capacity getting doubled from here, from 1,05,000 to 2,10,000, maybe in next 2 to 3 years. And in fact, if you see the improvement in the performance has started seen coming in from Q2 of FY18. In Q2 of FY18, the EPS was at about 4.20 rupees, which was at 290. That means a sequential growth of about 30-40%. And with H1 FY18 EPS at 7 rupees, which if you translate that, it should give a FY18 EPS of anywhere between 17-18 rupees. But after expansion, the EPS can rise to 30-32 also. So taking all this into consideration, share now ruling closer to about 1,000 rupees, can move to a level of 1,200 in next 6 months or so.
Okay, Mr. Tulsian, thanks a lot for that long-term stock recommendation. That's Kingfa Science. Keep an eye on that. Udayan Mukherjee also joins us now. Udayan, good morning. First, did you study this IDFC Bank Capital First deal? And I mean, your thoughts on the space overall. Do we see more deals going forward?
Morning, Anuj. I like the deal because I think of course, you've just been discussing what the ratio means, and in the near term, of course, it means that Capital First has got a better deal in terms of the ratio and should gain more than IDFC Bank. But I agree with the assessment just aired that IDFC Bank itself should not do very badly, in fact, not go down in the red. And I think it's a vastly superior deal to the one which was proposed and called off with Sriram. My best leaning towards the deal is because of the change in management, because the erstwhile management of IDFC Bank had a pure wholesale orientation. They did try to get into the retail space for a couple of years, but with fairly limited success. And I think the fact that Vaidyanathan is coming in now probably gives it a far greater edge in the retail space, given his track record with the NBFC that he used to run. So my sense is the stocks get a bit of a management re-rating, and that is very, very significant in the banking business. Of course, Vaidyanathan will have to prove that he can develop the liability franchise, and that remains a question mark, because growing CASA is not very easy competing with some of the other banking titans. But I think it has the makings of a fairly significant deal, and after things stabilize and if they can show signs of CASA improvement, there is a potential of re-rating of the combined business going forward. So yeah, it looks like it has got the shape of a nice deal.
Okay. Morning, Udain. We'll come back to you on this. I mean, it's just that Rana Kapoor and Uday could also struggle to create CASA, and Uday could ultimately do that only by buying Vaisya Bank. So it is going to be a tall ask to create retail assets, as you pointed out. But your thoughts on the market itself, ferocious rally on Wall Street as well. Do you think that there is an 11,000 even pre-budget?
Who knows? I mean, it could happen in the next 1 week, the way the market's going. So as we discussed last time, Lata, this is a market which is driven by a fair degree of global momentum. The local money is still very much in the market. And I think what short sellers have found out over the last couple of times is that this market is not rewarding that trade, which makes them even more suspicious and careful about pressing short sales at higher levels. So I think momentum still remains with the bulls. There are enough lags of caution, but that will not stop the market from going higher if this current global rally continues. We have expectations from the budget also floating around. So this is an interesting couple of weeks period. And, 11,000 is what, 300 odd points away. So, that's short work, 2.5% from the current levels. It could happen in 1 week, not just, it may not even take a month.
Okay. Well, by the way, the pre-opening rates have settled about 40 points higher. It's banks that are leading from the front. ICICI Bank, HDFC, SBI and Axis Bank are all up about 0.5 to 1% odd. Udain, hi, good morning. I wanted your thoughts on the IT space. Are things turning around? Because, this time around we saw no major negative surprises. Of course, growth was paltry, but no shockers as such. The commentary on BFSI has been improving and these stocks are sitting at 52-week highs. What did you make of the numbers that have come through so far?
I think what's happening, Sonia, right now is a valuation catch-up. I don't see any major growth. When stocks run up, then you tend to look at even small positives with green eye shades, and that's probably what's going on with IT. 0.8% constant currency revenue growth is not the stuff which should excite the street. 1.3% in the case of TCS. If this is a positive growth momentum sign, come on. Look at the last 5-7 years of performance for IT, and we are now jumping at joy for sub 1% kind of revenue growth. I don't think we've seen any great sign or demonstration of growth coming back to the sector. What had happened is that the market itself had run up quite a lot and IT had not participated. So the valuation gap between the market and the IT sector had actually become very large. And all that has happened over the last few weeks is IT actually catching up with that valuation gap. Within the sector, you can ask whether TCS, given its fairly tepid growth momentum, deserves such a big premium to Infosys, and whether Infosys can close the gap further. That is entirely possible. But I don't think that this quarter has demonstrated any major growth recovery in the sector as such.
Okay, we are ignoring that the markets may well open above 10,700. Sudarshan, if it does, you're straight away into buy mode?
Yeah, we should be buying after that 1 or 2 minutes of cooling, the Nifty bank as well as the Nifty. I've given the stops earlier. Okay,
yeah, incidentally 25,860 almost on the previous high is 953, is it?
25,953.
Okay, we're not a very long way away, considering that the bank Nifty has been struggling for so long now. Mitesh, what would your first trade Nifty trade be?
Most likely, Lata, buying on the bank Nifty or banking stocks, particularly from the private sector banks.
All right. Okay, let's just wait by. There is IDFC Bank and HDFC pulling up, and ICICI Bank pulling up the Nifty Bank as well. So at the moment, it's the Nifty Bank which is the biggest gainer. But